So, Brian, I'm so excited to have you on the show because, as a steward of people's high net worth, and you've been extremely accommodating when coming into my network and talking to some of my professionals or people that were looking to sell their business and enter into some M&A activity. And of course, these guys are just mostly the business owners are focused on building their business and now that they're thinking about unwinding it, they have no idea what they should be thinking about. They don't even know what they don't know, right? So I'm going to really want to jump into that. But before we get there, I'm just curious, what helped you or what inspired you to start your career in M&A?
That's a great question, and it really comes down to you timing, right? I have a illustrious 34 years in the industry, as you had rattled off, and you acquire a huge taste and a body of work experience from those 34 years, and you get a great deal of subject matter expertise, and of course you build a network which everybody listening, and that's the holy grail: access to people's time and attention and alignment, if you will. About 4 years ago, Oppenheimer Funds, where my last stay was in corporate America, they merged with a firm called Invesco, and they at the time I said, what am I going to do? So I went in to really set up my own. I left that and set up. And prior to that, I was always raising capital, public and private, mostly public with Oppenheimer Funds, but designed some coaching material there, working with gentlemen like you and teams and to how to become a better wealth advisor, more holistic, and address issues that back in the day when you and I started, they weren't addressing, just from the broker dealer. Just go after people with custodial assets, and that's what you should do, right? So about 8 years ago, one of my friends who started, the founder of Vesticore, approached me. I have 6 children, 4 of them were in college, and he said, "Hey, come on board and help me build this out." And of course, like anybody, if anybody has children and anybody has a good thing going, you don't want to just leave and jump to something else that's more of an early stage startup. So, circa, 8 years ago, then 4 years ago, when I did that, I said, well, he approached me again. I said, well, let me walk this out. Let me become a placement. I started a placement agency, raising capital for entities or private funds and individuals and corporations, be it private credit, private equity, private real estate, etc. And then, COVID hit. Both of my parents in the Cincinnati area had passed, and of my 6 kids, my baby was 21, and I said, well, in college, and I said, you know what? I think I can. I have more flexibility to do whatever I want from that perspective. So I approached Gary Rakin, the founder of Vesticore. We're a boutique M&A advisory firm, investment bank, and he says, come in, run this, and help me develop business. And the thesis was really simple. M&A firms, we're all capable of doing the same thing, right? But I approached this and I said, oh my gosh, I have the holy grail because I have access to wealth advisors by 1 or 2 degrees in the whole country. I have access to a plethora of attorneys and accountants that I've gained, relationships with over the years, and I will be their go-to resource. So that's how I jumped in about 2.5 years ago. I came on board. I started refining everything that this boutique was doing, and I realized that I could provide something that in my doings and in my empirical data that very few, if any, M&A firms have access to. From a business perspective, is I have that 1 or 2 degree separation from every wealth advisor in the United States, right? I know what advisors do. I know what inspires and motivates them. I know how accounting firms and law firms work. And so I said, well, we'll build our thesis to be more advisor-centric, financial professional-centric, where we're do something where most, if not all, M&A firms will not do. And that is build bandwidth around talking with accountants, attorneys, especially wealth advisors, and their business owner relationships, their clientele, even when those people are not ready to exit. And so in the last 2.5 years, I've been building out that thesis, creating formality around it, building bandwidth around it. So the unique alignment that I have with people like you, Stuart, as well as wealth advisors, other wealth advisors, attorneys, and accountants is, yes, I'm an M&A firm. Yes, other M&A firms are just as competent and capable of taking a business to market, formally, competitively, and looking for the right solution, business partner, etc. But what we've done is we built the bandwidth to become a service model, an arrow in your quiver, if you will, to partner up with people like you and other professionals, accountants and lawyers, and giving access to advice, second opinions, just optionality of what they can do, whether they want to do it now or in the future. And that's the key, even when they're not ready to exit, right? And so everybody wants to do it. Everybody's capable of doing it that's in M&A, but who's aligning themselves with those professionals such as yourself? Who is providing resources and time and energy? And, legally you would call it pro bono. You and I could call it stewardship. Somebody could call it an investment of time, correct? Well, we've built bandwidth around that because we know what motivates our financial professionals, an end result. But we know that if we do this, our thesis is when it comes time for them to execute in some form or fashion, partially or completely, we're most likely not going to be in a bake-off because we've developed a relationship with the steward of the world that brought me the business owner or the accountant or the attorney, and we've worked with them pro bono, air quotes, by being that aligned with them even when they're not ready to exit. And so it started about 2.5 years ago that immersed me fully into the M&A space.
Well, that's fantastic. That really fits within our business model. We're, as you were alluding to back in the day, we're just trying to manage just a particular amount of assets. And our business model has grown to where we want to partner with CPAs and other experts so that we are managing all cycles of our clients' journey, right? I mean, they don't just want you to manage their money. They want you to help them manage their life. And they have you there to be the resource. And so as we're working with the CPA, and as you pointed out in past conversations that we've had, if you have a business owner who's over 50, they're being approached by dozens of people to have them unwind their business. And ultimately, that's probably their plan. So we're talking with our CPA partners about working with the business owners who are gray-haired over 50 like me that are potentially going to be selling in the next 3, 5, 10 years. There's going to be a percent. And we want to be able to help them pre, during, post, and have the resources to be able, and this is what all of our best clients want anyway, right? They expect this out of us. And you have other financial advisors or other people, other M&A lawyers, other CPAs, other people that are just sitting back saying, that's not my job. Kind of is your job. Kind of is your job as a fiduciary to mold that experience for their life cycle, right?
Yeah. I mean, I think of it this way, and this is where I built my thesis and refine it. In fact, that's why I'm casually dressed, because I'm working with a bunch of private equity firms today that are taking me golf. Not that to any of the listeners, I don't know how to play golf very well. 6 kids, I'm running around with soccer and swimming and stuff. But nonetheless, business owners are on an island. They literally are on an island, and they're professionals, whether it be you, Stuart, or their attorney or their CPA. They're all masters of their vertical, and they do this. But when it comes to having a professional that can help them with questions, optionality, no offense to you, no offense to the attorney, no offense to the accountant, even if all of you master M&A-esque work, right? But the M&A firm, not just my firm, Vesticore, but in speaking broadly, M&A firms, we are the professional missing link, helping them get off that island, providing them what they themselves, the business owner, the attorney, the CPA, the risk manager, the business broker, can't do, and picking up where they left off. And that is taking the objectives of the business owner or business owners to market in a formal competitive process to find the right solution, to find the right buyer, the right partner, and meet all, if not most, of those objectives, right? But the business owner is literally on an island. And again, none to the listener, whether it be your attorney or a CPA, but a lot of times these business owners come to you, get answers to questions that they didn't ask, and perhaps they get a billable. What I provide to all of you that are listening, especially the wealth advisor, the attorney, and the accountant, is a resource where if you choose to perform, if we're on the phone together and you want to send a billable, that's fine. But I want to become that arrow in each and every one of your quivers, so you can use me as a sounding board to provide optionality, so all your clients know that you have a resource that can be of service to them on all aspects of their financial well-being. whether it be
Yeah.
law, whether it be accounting, especially you, the wealth advisor is the last one standing. When a business is sold, the accountant's done, the attorney's done, the M&A firm is done, everybody's done. The only two people standing are the wealth advisor and the business owner.
Yeah. Well, I have a whole list of boring questions that I've got for you, but what I really am curious about, to be honest with you, is, we're talking a couple of times about what the business owner, he's on the island, he doesn't really know what he doesn't know. What are some examples of some things that you've come across in your 34 years that are just probably even obvious to you, but that just kind of flew by or over the head of the business owner until you stepped in and pointed some of these things out?
Wow. I mean, I could
I
go
have
hours on
a
all.
zillion examples, so let's have a couple.
So, I mean, look at it this way, going back to them on an island. Believe it or not, statistics think that if you, Stuart, as a wealth advisor, were just going through your normal protocol and what you do at your practice is very thorough and you're very holistic and you're kind of like the owner, not the general manager, the coach, but the owner of the team on all aspects. But business owners surveyed, actually 7 out of 10 think exiting means getting out completely. And for the most part, especially if it's going up to a strategic or family office, private equity, and I'm buying somebody's business or one of those entities, you're not leaving. There's culture, there's a bridge of information that has to be, you're going to be involved with that business for 12 to 24 months plus, right? But 7 out of 10 of those business owners, they're in their mind, I'm going to retire, I'm going to sell my business, I'm going to pasture. And they actually think it means getting out. And that couldn't be any further from the truth, right? That's one example. Another example, and this is sad, but it's true, and we cloak things in reality. 4 out of 5 business owners that want their kids to take over, not 4 out of 5, but of the business owners that want their children to take over, 4 out of 5 children want nothing to do with the business. And they're currently working with their parents, fathers, uncles, or whomever. And that's a rude awakening when they go, I'm thinking of exiting, and the kids don't have the heart to tell them that they don't want it until they go through a process. And then all of a sudden they have that realistic conversation in the corner. Dad, I want nothing to do with this. And sadly, I joke about this and it's funny, but it's not so funny to the owner. Kids today, whether they're our age or younger, they want to get wealthy the old fashioned way, inherit it.
Yeah.
Right? And so sell it, Dad, sell it, Mom, and then we'll figure out what to do post. So those are some examples that are going on. There's other things like, hey, I want my children to be involved, but I don't know if they can run the business. Can you help me? I want to sell the business, but there's some family members and I know they're not going to make the cut. What's the best way to do this? Or, hey, I really love the people that built this business and I don't want to leave them short shafted and just sell them to a private equity firm and which basically rent companies for purposes rendered. They're not doing it unethically or immorally. It's just their process, their business model. Is there a solution? And maybe an ESOP might work in that situation, right? So there's a plethora of things. And I think where we come in working with people like you or attorneys or accountants, no matter how good you are at your skill set, we're the ones that can provide different optionality that you're not going to provide, the CPA is not going to provide, the attorney is not going to provide, maybe in hearsay, right? Maybe just in conversation, but more case studies per example. If I sold 15 HVAC companies, all the same size, here's what's happening. Every one of them has a desirable outcome. So therefore the process is the same, the timeline's the same, but each outcome is completely different.
Yeah.
So those are some things that you see that business owners may be not aware of that we can provide to give them some kind of comfort or give them information to make an informed decision.
You mentioned culture. I'm curious, like how important is culture? Like I think as a business owner, you want your business to go to somebody that kind of aligns with your interests. And outside of that realm, culture can be perceived as a little bit of a foo-foo term, like, oh, well, whatever, it doesn't really matter. How important do you think culture fit is?
It's extraordinarily important. I'll give you one funny example, sad but true. I guess all of them are yin and yang. but they made their life with this. This is what paid their kids' is college. This is their life. This is their brand, whether their name's on it or not. This is everything that they've been endeared to. So they're not just going to turn it over for a check. They're not going to sell their soul to the devil just to say, hey, I made money, right? So culture is huge. I mean, and also you got to realize too, going back to that 7 out of 10 think they can just walk away, which couldn't be any further from the truth. If I'm going to sell a portion of my business, partially or completely now or in the future, and I'm going to be part of it in some operating capacity, 12, 24 plus months, I better be working with people that I like, right?
Yeah.
And so there's elements of cultural change. You might be the best fit culture, Stuart, to buy my business, but I might just not like you, right? Maybe your personality, maybe you're a good ethical person, but I just don't like you. And I had a deal last year we sold. It was about a $52 million deal. That's the operations in the property, OpCo, PropCo combined. And we did 5 management meetings and 3 on one day, 2 the next. They're 2-hour meetings. This is courting each other. Everybody's courting each other to see if it's a right fit. And we took this down the funnel of 300, probably 75 indications of interest, down to 15 LOIs, down to we picked 5 people to do these management meetings. And I thought the best presentation was the last presentation. It was a very wealthy family office. They could have paid an extra multiple just to tell everybody I've got the power to do that, right? And they weren't a PE firm, so they weren't looking at IRR, et cetera. And we walked over to Capitol Grill, and we typically do this. And we said, we don't have to do this now, but prioritize who you would like to be the buyer or partner of your business. And he says, any of the 4, not the last conversation.
Wow.
Now, I thought this conversation went extraordinarily well. I thought it was very simpatico. I thought the relationship was charming. There was no pushback. He just didn't like the vibe that this gentleman provided.
Yeah.
There's no rhyme or reason to it. There was no financial engineering logic to it. It just didn't feel right. This guy had an intuition, and he says, I'll sell it to any of the 4, the 3 we met yesterday, the 1 we met this morning, but not to that gentleman. We really didn't even go into depth. It didn't matter. It didn't matter. So obviously that gentleman didn't get it. So culture is really important, but it also has to do with the personal fit of the individual seller to the individual buyer.
Yeah. So when I got in the business of my financial advisory work 20 plus years ago, there were like 10,000 publicly traded companies, and now we're at like 3,500. And the IPO market is, non-existent right now. I'm sure you're going to have a rebound at some point, but how does that affect this private market? And kind of dovetail into that, what are some of the biggest changes or trends you've seen in the M&A industry?
Well, it's growing. I think private equity. So think about your buyer. If you're going to sell business, you're either going to sell it to another individual that's 30 years younger than us, right? A lifestyle business. Or maybe it's a strategic, an HVAC company buying an HVAC company. Maybe it's a private equity firm. Maybe it's a family office that wants it long term. Maybe it's an add-on. I already own a company and I'm just buying smaller ones, kind of like what up in your neck of the woods, the Heisiger family did, which became Waste Management, right? Buying a bunch of little defrag garbage companies, et cetera. That's been growing over the last 30 years. Usually it was just, who do I sell this to? Maybe it's big enough, I become an IPO. But this is an interesting statistic. Last year, for the audience that's listening, the dollar number of businesses bought and sold in the US alone exceeded $1.6 trillion. Now, for transparency, that's OpCo and PropCo, okay? 1.6 trillion. Next question. Well, how much of that was public companies? NVIDIA buying another software company, Coca-Cola buying Pepsi, et cetera. That number was only 10%. 90% was private. So somebody like you is involved, some attorneys involved, some M&A M&A attorneys involved, some trust and estate attorneys involved, the business attorneys involved, the business CPAs involved, and there's an M&A firm involved, right? But the ones left standing are you and the advisor and the business owner. But it's growing exponentially because people that are baby boomers, Gen X, and even younger are wanting to unwind. Some of them are wanting to take chips off the table. But
Yeah.
what they're also realizing is there's people out there that own XYZ Corp and they would like a smaller XYZ Corp. And so the owner of the smaller one says, I just don't want to get out yet, Stuart, but I want to grow this and maybe that'll be my exit strategy in 5 years. So we're going to grow it and then sell it.
Yeah.
And then you get me involved. And I said, well, that's a great option. And we're here to help you out during that time. Or we could take some chips off the table, right? And have somebody that knows your business or knows that industry or sector, and that can help you exponentially 2x the growth over the next 5 years. So the second bite of the apple is even bigger than the first, right? So a lot of that is taking place. So 1.6 trillion last year, interest rates rose. That came down from the 21, 22 years because it's the cost of capital. But I was this golf outing I'm going to shortly. I was in one about a month ago, and they said their January was the biggest year they've ever had. These are private equity firms. So you have a lot of pent up, deal flow and dry powder that's ready to invest. And you have a lot of people that are 1 year older, closer to 65 or 60 or whatever their magical number is. So there's moving parts all day long. And so what we do know is if you're a business owner and you're looking for optionality, there are a lot of people that are interested in owning your business. You just need to make sure that you're aligned with the right team to help you find the right purchaser, buyer, or partner.
Yeah. Could you take us through typical steps of an M&A deal, and probably more importantly is the timeline? Because I find a lot of, from my perspective, a lot of owners are like, I'm going to sell my business. I've entered into an LOA. I've kind of already done the thing. And they start to make phone calls to people, hey, I need to help reduce some of my taxes, or hey, I need to do stuff now. And from my perspective, I should have had that call 5 years ago so that we can help plan. So can you talk us through that timeline and the steps from, as they say, soup to nuts kind of thing?
Yeah, I mean, if Goldman Sachs, big bank, Morgan Stanley, the big banks, whatever, were to do a deal from start to finish, and I were to do a $10 million deal with you or something, or one of the listeners or whatever, let's just go from big end to low end or whatever. And that's not a given number or anything, but let's say that. The process is pretty much identical. The timeline is pretty much identical. So if you introduce me to one of your clients and I'll explain that process in more detail, but it's typically 6 to 8 months, all in. Now somebody goes, well, is that how long it takes? No, I mean, what if they want to domicile in the state of Florida? I think we need to do this way in advance of starting the process, right? So there's a lot of work to be done way before this happens. But that's another thing, going back to one of the original questions you asked me. Business owners are not familiar with that. They think when it's time, something triggers, the catalyst triggers, and they go, Stuart, I want to sell my business. Ready, go? And you go, well, what's your timeline? Right now. Well, that's not, that's not really digging a well before you thirst from a parable standpoint. We should have done this a year ago, but let's do it, right? So typically the introduction would occur from you or the accountant or the attorney. We literally sit there and we talk with them. We want to find out what their desired outcome is. We want to know what they think their options are. We want to give them options, but we want to just be in discovery mode, right? And if the process is still the same, the timeline is still the same, whether it's $1 billion deal or $1 million deal, we want to make sure that we are capable as a firm, Vesticore, is going to be taking those objectives to market and finding the right desirable outcome, right? So even after we talk to them, even after we get their idea of what we want to do, we're not going to just paper up with them in an engagement. We're going to take them to market to get a flavor for the demand for their business, right? We're going to talk to some, in an anonymous way, we're going to talk to some strategics, some family offices, some private equity, some independent sponsors, etc. We're going to get a flavor for how much their business is in demand, right? Sometimes we don't need to do that, but we do it anyway. From there, we come back and have a second call with the person. Maybe it's a third, maybe it's a 10th call. I don't know when we started the relationship, but if we're doing the process, the predictable process, we're going to come back and say, hey, Stuart, we have a lot of pent up, demand for your company. We feel very confident we can find the right buyer, the right partner, and meet all, if not most, of your objectives. And then we engage, we do an engagement letter with them. and then we take them to market. What's that look like? We get all their financials. We put together what they call a confidential investment memorandum, which is like a perspective of the business on the business, a teaser. We put the NDAs together. We put the data rooms together, and then we go full entourage into market, and we take that to market. Then from there, we're going to get indications of interest, and then we're having conversations with all those people. And we're not going to just throw it out to market and say, we know 6,000 private equity firms. No, these are relationships like you have, like your accountants have, the CPAs, if you will, the attorneys. And we're going to take this to market to maybe 300 people, maybe less, maybe more. It all depends on what we're looking to do, right? And from there, we're going to get indications of interest. We're going to talk to them, give them data and information. And typically from there, we're going to go and we're going to narrow it down. We're not going to put 100 people in front of a business owner. We're going to narrow that down to maybe, 4 to 6 different people and get what they call letters of intent, right? Letters of intent with the price of what it is. And then we're going to do the management meetings. So we're going to walk through this, and one will be chosen. And our goal is to find the highest potential value for that business, to create the highest potential value for that business, and find the right cultural fit. And it's a combination of what we do, what the owner wants, right? Everybody's part of this, and everybody's part of it. The attorneys, the CPAs, the wealth advisors, everybody's part of the deal team. We just provide that last missing link, and that is taking the objectives to market in that formal competitive process. But everybody's involved.